Welcome to Iron Vision Trading, Episode 6. Today, we review trades for week ending August 7th, 2026. So let's get right into it. First up, we have Palantir. So we actually did two trades in Palantir, both really for earnings. First, we sold a put spread, a 122-117 put spread, brought in $2, $2.01 on that trade. And this was actually in the 4-day cycle. So the August 7th expiration cycle, the weekly, we were looking for a quick move in Palantir, and we actually got that. So the next day, we were able to take that off for literally max profit on that side. We took it off for 1 penny. So $201 profit on that trade. And in hindsight, we would have been better off if we had only made that trade. But we did also put an Iron Condor on, at 110, 140 Iron Condor. We collected 208 on that. And because we did get that massive move up, we took the put side of that trade off as well. So that time for 3 cents. So now we have no risk to the downside. And we really are playing for a mean reversion back to hopefully under 140. Otherwise, the call side of that Iron Condor would go to max loss. And we could stand to lose about $100 total between the two trades. For Meta, we just had the remainder of an Iron Condor from last week's earnings trade. Meta had dropped significantly. We had taken the call spread off for nearly max profit, and we were leaning long. And we actually did get the uptick we were looking for in Meta, and eventually we were able to take the 520, 530 put spread off for 83 cents. So overall, we made $302 on this Meta earnings trade. All right, on August 3rd, Apple had a bit of a down day, so we sold a put. Sold the 280 put in the September expiration cycle. We were able to bring in $3.10 credit for that. And the very next day, Apple recovered a bit. We were able to take that off for an $83 profit, so we went ahead and did that. Bit of a similar story for IBM. So instead of a short put, we sold a put ratio spread. We were able to pick up $1.77 for that. And then 2 days later, we were able to take a $102 profit out of that trade, so we closed it out. With the continued strength in the NASDAQ, we were able to close out our short put position, and this time for over $1,200 profit. If you remember, this one actually started back at the beginning of July. We sold it in the August expiration cycle, and we had some weakness in the NASDAQ and found ourselves tested on that position. So we rolled it to the next expiration cycle when we hit our 21 days to expiration marker. In doing so, we brought in additional credit. But with the turnaround we saw in the NASDAQ this week and volatility actually collapsing, our profits came in really quickly, and we were able to take this off for a big winner. For EEM, we did get some continued move in the right direction for us. We were short 2 different puts, one from an old trade I had and then one newer one that my wife had put on in her account. So with some strength with EEM and then just some stabilization and volatility contraction, we were able to take both of these positions off. The 67 short put, we took off for an overall $270 profit on that trade, and that's one we had actually been managing since April. So we had put on a strangle back in April, and we had navigated a pretty volatile market in EEM, as you can see on the chart here. But at the end of the road here, with all the adjustments we made, we were able to pull $270 out of that trade package. The trade my wife made that we followed on this account was much simpler. It worked as intended in this case, so we sold the put and bought it back for basically half. So we made $81 on that trade. And that one just in a matter of about 2 weeks. Similar to Palantir, we put 2 trades on for AMD this week for earnings. One, a downside expected move butterfly, and then just a delta neutral Iron Condor. And we got a little bit of redemption in our butterfly streak. So we had a pretty rough week last week with butterfly trades. But this week for AMD, we actually almost pegged our short strike to the downside. So we pulled $1,034 out of this AMD butterfly to the downside. And we do still have the Iron Condor sitting out there, but we're still within our short strikes, so we're happy to just let that run. SpaceX also had earnings this week, and we put a few different trades on for it, one of those being an expected move butterfly to the upside. So after the IPO, SpaceX has dropped pretty significantly, so I'm leaning long on SpaceX. We were looking for a move up to about 145. We did not get that. It actually dropped even further after earnings, so we were able to recover $61 out of that trade. That was a debit trade. And so since it moved against us, we went ahead and closed that out. So again, another losing butterfly, but this time at least it didn't go to max loss. But I also just sold a short put into earnings. And even though the market dropped, And so it actually got closer to that short put because of the volatility collapse. And then we did actually get a bit of a reversal and recovery in SpaceX. That short put actually became profitable very quickly. So within just a few days, we were able to pull $343 out of that short put. So another thing I did was buy a diagonal spread, and really a leap diagonal spread. So I bought a very long, a 500 plus day 100 call, and then I sold a 135 call against it, but this in a 44-day expiration cycle. The entire trade package cost me about $3,600, and what I'm looking for is that we get that continued move up in SpaceX. Ideally, it doesn't blow past the 135 call within the next couple weeks, but we'll deal with that as it comes. I'd love to be able to just continue selling calls against this every month or every few weeks and continue chipping away at my basis so that eventually I have almost nothing in that long call. And if SpaceX does continue to move up, we'll continue to gain intrinsic value. So the more I can sell calls against this, the more my cost basis goes down, but the more intrinsic value we can gain if SpaceX does move the direction we want it to go. So this is a long play for SpaceX. I do long-term have a positive outlook, a bullish outlook for SpaceX. We picked up some long shares in a few other accounts, but in this account specifically, we just went long with this leap-style diagonal. McDonald's also had earnings recently, and we didn't actually put a trade on for earnings, but afterwards, implied volatility was still high, so we just sold a strangle. We sold the 245, 290 strangle for 368, and we still have that position on. So we finally got our up move in Oracle that we've been waiting for. Back in July, we put the Jade Lizard on, and all we had left of that trade was the 125 put in the September expiration cycle. We had collected just over $1,000 on the trade. We were able to close that out for almost $500, $486 winner with Oracle. So I took that and ran with it. Really happy with that trade. With Procter & Gamble, we were leaning long with the 140 put, and we did get a recovery back up to about 148, and that allowed us to take a $143 profit out of the trade, so we closed that out. We actually got a huge recovery in gold this last week, and actually it kind of happened in two different steps. And so I sold a call on one of those up days. In hindsight, I was a little early we don't know what's going to happen, but I thought, okay, big up day, time to go ahead and sell a call, and I'm able to sell it above my put strike, so now we're back to a strangle, and so this looked really good. But then we actually didn't get another couple dollar move up, and so it would have been better if I had waited, but we did sell a call now, so now we're back to the strangle with our GDX position. We've got the 85 put and the 93 call. Now we're just looking for gold to just settle down a bit. If we continue to get a bit of a move up, that's great. Now we don't want to be tested on the upside, so something into the 90, about 90 or so for gold would really be the sweet spot for us. On the 5th, we put on two earnings trades for XYZ, an expected move butterfly to the upside and a strangle. Now the butterfly cost us $1.46, but we collected $3.18 on the strangle. Unfortunately, XYZ dropped after earnings, so our butterfly is basically a max loss. We're out about $150 on that. Fortunately, though, the strangle is coming in nice, and so it looks like we're going to be able to offset the loss from the butterfly with the strangle. So as long as XYZ stays relatively close to where it's at over the next few days, it'll be like this basically never happened. So next we have an Iron Condor and Western Digital. We put this on for earnings for about a $4 credit. After earnings, the stock massively dropped, so we were able to take the call side off for 20 cents, and now we're just leaning long. We've got the 450, 440 put spread. This is just in the August cycle, 16 days to go. Because this was defined risk, we weren't quite as worried about being inside the 21 days to go, and if we get the move that we're looking for, our profit will come in even quicker, so we are leaning long on Western Digital. Next for SanDisk, we sold the 1210 put spread for about $4.80. A lot of premium in this stock. It's a really expensive stock, over $1,200 a share right now, but actually it was up over $1,500 and even higher than that. So it's on the heels actually of a really big pullback. So we like to take a contrarian position with a lot of our entries. So since the stock has had a major pullback, we're kind of playing for a reversal back up to the mean a bit. So now we're just looking for an uptick in SanDisk and we'll be in good shape. Basically the opposite position here in Microsoft. So Microsoft has had a massive run up. So we are playing it short. We've sold the 510, 515 call spread. So we picked up almost $2, $1.90 on that. And we're playing for a reversal. We're playing for the downside move now in Microsoft. Nothing really notable in SGov. As we trimmed some of the winning positions, we found ourselves with a little more cash in our account, so we just picked up another 100 shares of SGov to put that cash to use. We finally got the recovery we've been looking for in IonQ, so on the 7th, we were able to take both of those puts off, the 35 and the 40 put that we've been battling for a few months now, for a total of $316 profit. So that wraps up all the new trades from last week. Let's take a look through the account and see if there's anything worth talking about. Let's look at coin. We've got that leap diagonal, which is now basically just a calendar, but the call that we have sold is now down to 12 days remaining. And you can see we were up $577, so we did take another $100, I think, out of that trade. And we're going to leave it on a little bit longer. So again, with the stock being so far away from that, we could absorb a $30 move in coin. And that call in the August cycle is still going to basically be worthless. Obviously, if there's a few days to go, there'll be some level of extrinsic value in that. So we'd like to take a little bit more out of that, but we will be looking to take that call that's in that August expiration cycle off very soon. And then we really would like to see a massive uptick in coin so that we can sell another call against it. We're getting a recovery in Intel, with the stock being up $15 or so in the last week or two. We're still about $10 below our short strikes, and remember, we have the straddle here. We're sharing a short strike of 110. So I'd like to see a slow move up to that 110 and just hang out there for a while, and we'll be in good shape. But time will tell, so let's see what happens. We've had a really nice run up in SpaceX since we entered this long diagonal, and the stock is actually almost at our short strike. We're up over $800 on the trade already. I intend this to be a longer-term trade, though, so I'm not going to take those profits early. I want to see how many times I can sell calls against this and reduce my basis. But if the stock continues to rip and I can't find an opportunity to get out of this call or roll it up, then we're still going to be massively profitable on the trade. So let's see what we can do in the coming months and see if we can find an opportunity to roll this up. Every time we roll it, period, we can roll that short strike period, we'll collect more credit. And if the volatility stays elevated and we can roll out and up at the same time, we can increase the amount of intrinsic value we can capture as well. Not much else of note for this week, so we're going to call it there. Thank you guys for watching. I really appreciate it. Take care.